You're watching Option Rally TV. I'm your host, Amy Anderson. Here's your trading news for June 13th, 2013. The yen powers its way below the 95 line. Investors expect big things from oil. And lastly, Canada stands tall and awaits the parity party. Your daily review is starting now. Asian stocks were bashed Thursday as the Japanese yen spiked and the World Bank lowered its 2013 global GDP growth forecast. The lower the cost of living, the more strength a currency will have. The yen spike was also supported in the pair with the U.S. bond buying issue. If you recall, the yen not so long ago had its 100 mark broken. That line seems to be far away as the currency pair is below the 95 line. U.S. dollar to Japanese yen opened Wednesday at 96.05, slashed down to 94.70 through Thursday morning. Natural gas prices rose on Wednesday ahead of the release of Thursday's supply data, with investors expecting the numbers will show greater demand than last week's report. So it's all about the temperatures. Last week, the forecast called for a cooler than hoped, which lowered the price of oil. Okay, you can simply watch the weather report and get a great idea on what will happen with oil. Investors are confident, which pushed global sellers to raise the price. Oil opened Thursday at 94.92, lifted and rose to 95.31. Now the dollar fell to a one-month low against the Canadian dollar on Wednesday as market sentiment recovered following a sharp sell-off on Tuesday, sparked by concerns over central bank stimulus plans. The greenback bounced back slightly, but the continued problems in the U.S. gave Canada the noted news today of reaching even closer to parity. Okay, U.S. dollar to Canadian dollar reached its highest point on June 6th at 1.0354 and dropped to its lowest level in a month at 1.0160 when it nested in at 1.0217, continuing Thursday. For today's Market Watch, it's time for the weekly U.S. initial jobless claims. This measures the number of individuals who filed for unemployment insurance for the first time during the past week. This is the earliest U.S. economic data, but the market impact varies from week to week. This is the weekly precursor to the non-farm payrolls, a higher than expected reading, which means more people are unemployed, should be taken as negative. I'm Amy Anderson. For your daily dose of the market, follow me at OptionRally.com and on Facebook. See you tomorrow.